Well, good morning, everyone. Welcome to our Tuesday morning trading room. Hang on here a moment. We'll get the screen share going on. All right, yesterday the market, well, I'm not going to say it ate my lunch, but it was not very cooperative. This was yesterday's bar right here. This doji bar, a lot of this tail on this doji bar came in the overnight. The day session is actually pretty much a mirror image of what we're looking at for today's session. The market trading in a very, very tight little range, very congested. And you can see we're still within that same zone. Volume was up yesterday, no doubt in part to the September contract nearing expiration at the end of the week. Let's take a look here at the Eagle, and you can see that there's some decent ranges, but we're quite constipated. We're really not moving all that far. You can see we're trading, it seems, between 78.50 and, well, certainly no higher than 7,900. Your first in sync Eagle signal printing here right around the opening buzzer. And I see there's a couple new people in the room with a couple of questions here. What's going on? So let me go over quickly what you're looking at here. Well, I don't have to do it quickly. The market's not doing much. All right, what we have here is the complete DTS system along with the Raptor. In the top left, we have the Hawk Micro Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader, and then the bottom right, of course, is the Raptor. These charts are all showing the NASDAQ, which is my personal favorite market. I do believe it is the best market, if not one of the best markets to trade for small traders, giving you the most bang for your buck. All my settings are the default settings. SS here has a question, and can we get Eric's chart templates for the DTS and Raptor? Yeah, you can. They are, like I said, the defaults. The only thing that I've changed that may look different here on the DTS system is I have turned off the background highlights. So you can do that by going to your indicators and finding your tool here. So your Hawk, highlighting that. And then you got to find where it says, there it is, background opacity. So you'll want to set that value at 0 to eliminate the background highlights. But yes, if you would like my templates, I can certainly send them to you. Oops, hope I didn't break something. I'll put my email in the chat window. And you can just email me directly and I can send you the template. But like I said, it's pretty much the default. Oh, plus, sorry, I should mention, I do have a system add-on here at the bottom. This is the Bollinger Band suite, We featured it during one of our Rabbit Hole Friday sessions, and I was so impressed that I kept it on. Pardon me. Okay, saw a little bit of a uptick on the market, only to watch them reverse again and head lower. I don't know. Right now, things looking a little bit more bearish overall. All four tools slightly more inclined to the short side. Here's a number one signal on the Raptor with a huge second push opportunity on it. So all the second push, when I say a second push opportunity, all that means is we allow the signal to engage, and then we see where it reacts, and then we use that reaction as our new entry point. And you can see we're getting a follow-up signal, a discretionary signal in the same area. This trade should work out, given the fact that the market made the quick rally higher and failed. It makes sense that the sellers are going to try to test the bottom end. Hovering around the median line. Let's see, is the market in trend mode? Well, only for another 3 minutes, then we're moving into swing mode. Almost seems as though the market may be getting a little bit more volatile. Darn, here they're going to threaten my stops. Ideally, I want to keep my stops 2 swings back without breaking the bank, because it's not uncommon to see them retest the last swing point, which is right here, obviously. Well, turns out I was far too late on that number one signal. I needed to take it on the hash mark or pretty darn close, because they're going to tag me out. Oh, that was so unfortunate. Yep. Shoot. That should have had a little bit more follow through here to the short side. Wow, is it quarter to the hour? No, it's not. We're only 10 minutes in. If it was quarter to the hour, at least I would have an excuse. Quarter to the hour being my least favorite time of the day to trade. Well, nothing like digging a bit of a hole to start your day. Well, what do we think? They're not heading lower. Are they going to head higher? Good follow through on the #1 signal to buy. Same thing with the trend change signal here on the Falcon. We're getting close to, or close-ish to, that 7,900 zone that has knocked the market down a few times the last few days. Oh, the joys of trying to trade opening range. Okay, so we're still trading within this rather large sideways trading range. I'm not going to highlight it, but it's essentially at the high and at the lows. Okay, the sell attempt did not work out. It does appear as though the buyers are mustering a little bit of a rally. I will attempt a buy. I'm anticipating a hard edge bounce. It is quarter to the hour, my least favorite time of the day to trade. There's my #3 signal. I'm going to get my exit order out of the way because I'm looking to buy. Okay, follow-up #3 signal, again, another hard edge bounce. So it looks like the price level we've chosen to enter is probably reasonably strong. I'm going to bring my stops in here a little bit, and then as we advance, I'm going to get ready for my break even. Ooh. Well, there was very little volatility yesterday and today. What's with all this volatility we have going on? Wow. Is this going to be one of these days where the market is just not cooperating? It does happen, you know. Okay, we're back into the hard edge. And note how we retested the last swing low. So we got 2 bars in our favor now. So I can actually use this zone because this would be swing 1, that would be swing 2. If we break this low, it's probably time to go. I guess we just don't have enough structure here this morning. We're only, less than 20 minutes into the day. Typically, if it wasn't for a trading room, if it wasn't people wondering, why are you not here on the open? I rarely look at the market during opening range. I usually walk into the office, at the top of the hour, fire up my charts, and then take a look at what's been going on since the market opened, see if I can discern a range, see if I can discern a trend. Come on, get up there. So I'll get ready with my stops here at break even. Come on, give me this bar, you stinkers. Look at that. 0 follow through. What's going on? Note the two swings again. Now we have swing one, swing two, so our stops are still in the correct place. Well, we're producing a number one signal. At least as far as the programming is concerned, the market's trying to get bullish. All right, another bullish push. Let's see if there's follow through on this one. There's a little bit of a bear trend line right here. Every time the market touches it, the sellers try to knock it back down. Wow. Well, this is not looking all that promising either, is it? If the buyers hold this zone, this will be the last chance for the buyers. You can start to roll your stops more aggressively. I'm debating a reverse, actually. I don't do this very often, but I'm debating reversing this signal. Because it should have worked out. All right, well, here we go on the reverse then. I'll put my exit order in. So what's going on now is we're going to end up stopping out a lot of buyers, right? We've broken this support zone, hence the reversal. At this stage, I'm pretty much just fighting to get to break even. I've dug a nasty hole for myself here to start. So as the clouds cross, we're going to get this pullback, and then hopefully the market will come back now with a number one signal. Okay, it's going to be one of those days. Every once in a while, there's going to be a day where the market is just not cooperating. You follow a high probability signal and there's no follow through. And I think here on the hawk, we're probably still getting decent signals. Here was the first micro macro cross with follow through. Well, here was the first micro macro cross. It would have struggled. It might have made its profit objective. But the fact that we keep flip flopping on signals makes the day very, very difficult. Here's a first micro macro cross. Here's a first micro macro cross. Here's another one. Here's another one. The fact that we keep flip flopping on signals and there's no follow through is a indication that, you know, the market's just not behaving the way it's supposed to. And you need to recognize that sometimes that's going to happen. That's why I encourage you to have a loss limit on your day. If you just don't recognize what the market is doing, then you can get carried away taking loss after loss after loss. But if you have a loss limit, ideally a dollar amount, or you can say a certain number of trades, then you essentially keep from blowing yourself up. You know, on the one hand, we have more than enough volatility here this morning, but there's no follow through. The market's just churning, just bouncing back and forth. I'm not entirely sure why. Rollover weeks are unpredictable, but not usually like this. All right, we got the proper number one signal to short now. The Falcon came online with a trend change signal. The Eagle also online with a trend change signal. So let's go back now here to our trade. Now, a few minutes ago, we were trading, well, we were trading below the median line, actually. We were trading down around 78.60, right down here. That was a mere 30 minutes ago. I would very much like to see the market back down there. That would, actually, I'm going to set a profit target. There, we won't be greedy. So we've got primary support at 78.55. I'm looking about halfways between the median line and primary support. Come on. Our Bollinger Suite keeps bouncing back and forth too. See down here? It's in the Bollingers, out of the Bollingers, in the Bollingers, out of the Bollingers. There's just no follow through. They're trying. Come on, you guys. Our range this morning is nothing. Here's the whole day right here. We haven't moved anywhere, just retracing the same numbers over and over and over. In fact, you could probably, maybe the smartest thing to do is just bracket this morning's range. Buy above the high, short below the low, and then just wait. Oh, there we go. Paul says FOMC tomorrow. Why is that report always sneaking up on me? That would definitely have something to do with the market misbehaving today. Ken says oil's down $3. Oh, goody. That means gas prices are coming down. Oh, dear. I amuse myself. We're getting some pretty nasty weather here today. Very winter-ish weather. Heavy rains and wind. A little unusual even for the Pacific Northwest in September. Well, you can see here, I've got my 5 points. I have my swing target. I know I'm going to be sorry I didn't take that, but let's get the trade here to break even. 10 points is our eagle target, which will probably put us somewhere here around the, just a little bit past the median line. Actually, you know what? I'm going to do that. So I'm in at 78.75. So let me get out at 68.75 if I can get it. There. There's my 200 bucks. The way the market is bouncing around today, it's not that I don't think we're going to get back to the low of the morning around 78.60. I do think that's entirely feasible. Managing the trade is going to be something else, though. Oh, I didn't finish my earlier thought. I mentioned the weather in case all of a sudden I disappear offline. You'll know the power went out. All right, I'm going to start squeezing this trade pretty hard. There we go. That's it. You get one bar. All right. They tagged me out on a little bit of a reaction here to the median line. It might have been too quick, but I'll take it. Take a little bit of the sting out of the earlier losses. Now here's a situation. I've had my 3 trades. So I've met my trade quota, but I'm still in the black, or pardon me, in the red. So in this situation, I would look to take another trade. Still having my loss quota, the dollar amount where I say uncle. Haven't quite leveled the playing field yet, but like I said, at least I took a little bit of the sting out of today. And with FOMC tomorrow, it looks like the fact that we're trading in such a tight range, so much congestion, it looks as though the market's really not committed to a trend at this point. Maybe a slight nod to the sellers. Usually when I say things like that, that's when the buyers show up. Okay, well, they tagged my what would have been my profit objective, but I'm okay still taking profit where I did. Ray says the 5-minute VWAP chart, where one deviation at 78.65 half. So according to the VWAP, we're due for a reaction, very, very close to the median line. And here we go with a little bit of a reaction. Okay, so yeah, Ray says that level was hit 3 times, but it couldn't get any further, couldn't get any lower. It definitely is a range-bound market. The other thing you can do with a range-bound market, of course, is identify the range and recognize that the market is going to attract sellers kind of in that top quarter, top third, and attract buyers in this area. This is where your limit orders come in. So depending how aggressive you wanted to be on the trade, let's say we threw in a sell limit order and we decided we're going to cover the trade up here above the high. So there's our exit order. This is a perfectly feasible trade. For those of you who want to be a little bit more conservative, you can look to perhaps not short it until it gets toward the top end, very near the top end. For those of you who want to be a little bit more aggressive, you can look to short it as soon as it gets into that top quarter. And likewise down here, you can look to buy the market on a limit order and then cover the trade below the swing low. This again, a very feasible trade, especially when the market is so congested. We don't have much in the way of structure. And you can see how the market's just stuck. All right. So this isn't a trade I would normally recommend, but here for demonstration purposes, let's see how it works out. So I can cancel my other order, my buy. Oop, yes, no, sorry, I need a sell order up here now. So I've bought the market. I'm going to look to sell it now, sell it back. That's going to be my profit order. Now, on these types of trades, you shouldn't be too terribly aggressive. But let's see if I can get 5 points here, which would be $100. Oh, Ray says fair price is 78.70 half on the VWAP. Oh, sorry, 78.74 half. So we're kind of in that neighborhood right now. And it looks as though the buyer's buying it up a little bit. And same thing, if I can get All right, I'm going to take the trade to break even at this point. Normally in this kind of situation, you can get your scalp target. If you're just looking for your 5 ticks, 2.5 points, you should be able to get that. Oh, come on, you guys. They were so close. I find this a more difficult way to trade because what you're trying to do is you're actually predicting what the market will do next, which I think is a lot more difficult. We could do the same thing here on the trend line, knowing that as a trend line gets broken, there tends to be a reaction, right? So here was a trend line, the market broke. You could have looked to sell the trend line on a break. You can look to buy this trend line on a break. Okay, let's try it again. So what I'm looking at now is a possible trend line break, right? I'll look for a trend line break, and then for the buyers to step up because the market has broken the trend line, assuming the sideways trading range will prevail. Like I said, not my favorite way to trade. Typically on a day like today, I will just admit that, hey, the market's not being very cooperative. I may check back, in an hour or so, see if it's trading any better, if it's established a trend. Yeah, Ray says, as long as I've been with you, I've never taken these kinds of trades. They're, like I said, they're difficult because you're predicting what the market will do next. Oh, there we go. We got that little bit of a hop up. So turns out I was a little bit quick with my exit order. All right, well, let's close that up. It looks like, well, we'll close the room here at the bottom of the hour. I don't think we're going to be missing a whole heck of a lot as the market continues to churn back and forth. I may check back, excuse me. Sorry about that. I may check back in an hour or so and just see if we have anything resembling a trend. The reason trend is so important is it shows you a bias. Once you know the market's bias, you're always going to be better off trading along with that bias. So you can wait for a hesitation, you can wait for a pullback, a consolidation of sorts, and just look to resume the trend. But the way the market is today, constantly back and forth, it's just going to be tough slogging. Honestly, I would recommend you go do something else. Yeah, see here, Keith, with the exact same problem, although Keith started off better. Keith says, good morning, Eric. Within 10 minutes of the open with 3 trades, I had 36 ticks in the NASDAQ. Put the mouse away, right? Wrong. Instead of doing that, I'm down 13 ticks. It's so easy to say, but doing it is a whole different thing. Most days, it's so easy to walk away after hitting your target. Today wasn't one of them. Over trading will kill you. It will. And you'll hear me say it time and again, but a trade quota is so important. There's usually 2 days every month where the market will make a huge move, higher or lower. And on those kinds of days, and you'll recognize them when they happen, days like this, or days like this, like the market opens and it just rallies and rallies and rallies, opens and rallies and rallies and rallies. Those kinds of days you can go back more than once. But notice what happens the rest of the time. We got these tall wicks and tails. A lot of these rally bars I know came in the overnight. The day session itself was pretty miserable. So I guess what I'm trying to say is, for the sake of those couple of days a month where the market is on a tear, do yourself a favor, stick to your plan. In the long run, it will serve you much better. But hey, as a friend of mine said, education's expensive. But at least if you learn something, then it was money well spent, wasn't it? All right, gang, let's do it again tomorrow. Hopefully the market will loosen up a little bit, but I doubt it. We're probably not going to see much activity until after the FOMC minutes, but, well, we'll touch back anyways and see what's going on. All right, see you tomorrow. Bye for now.